In this video, we're going to look at three main things. Why is wealth more inequitable than income? Two, different types of taxes, so progressive, regressive, and proportional taxes. And three, what's this idea of a universal basic income and whether it's a good idea for our economy? So first of all, as we mentioned in the last video, the distribution of wealth is a lot more uneven than the distribution of income. So the bottom quintile has a lot less wealth, whereas the top quintile has a lot more wealth than income. And the reason for that is that because wealth accumulates. So if you've got person one on 20,000, so say in the bottom quintile, and person two on 200,000 in the top quintile, then they're earning 10 times as much. But once you adjust for the fact that, the person on 20,000 has to basically spend all their money, where the person on 200,000 can save, wealth continues to become more and more uneven. So after 5 years, this person saved 10,000, this person has 500,000. After 50 years, they may be lucky to save 100,000, and most won't save anything because they just have to get by, where this person's been able to save $500,000. So they've been able to, person two's income is 10 times as much as person one's, but their net wealth is over 50 times eventually than person one because they're able to accumulate wealth and save. So wealth is a lot more uneven because those who have a lot of money are able to invest their wealth, it grows their wealth, they're able to save a lot more money, where those that are low income earners aren't able to save and aren't able to invest. So there is assistance provided to each of them. We talked about this in class, so I might just leave this for now. Progressive, proportional, and regressive taxes is the next thing I want to touch on. So a progressive tax, you've got to be really careful with your language. It's not enough to just say that rich people pay more tax. A progressive tax is a tax where the tax rate increases as taxable income increases. So high income earners pay a higher percentage of their income in tax, where low income earners pay a lower percentage of their income in tax. So it's all about the rate of tax or the percentage of your income paid in tax. Proportional taxes is when high and low income earners pay the same percentage. So say we have a flat tax rate of 5%. Now someone earning 100,000 will still pay more tax than someone earning 10,000. If you're earning 100,000, you'll pay 5,000 in tax, and if you're on 10,000, you'll pay 500 in tax. But the rate's the same the whole time. It doesn't increase the more you earn. And regressive taxes is a tax that makes up a large proportion of low-income earners' salaries. So it's when the low-income earners get taxed at a higher percentage of their income than high-income earners. Generally the case when we buy products, because if you buy a product, the tax will make up a higher proportion of the low-income earner's salary. So say there was like a 10% tax on cars, that would make up a higher proportion of the low-income earner's salary than the high-income earner's salary. So based on the data above, if a country has a tax system where high income earners pay more tax than low income earners, that tax system can be progressive, proportional, or progressive. So if you look at this one here, the correct answer is E. But if you look at this here, so say on the first 20,000 you earn, you pay 4,000 tax. Then if you're earning 40,000, you pay a total of 6,000. And if you're earning 80,000, you pay a total of 8,000. Well, on the first 20,000 you earn, you paid tax at 20%. The next 20,000 you earn, you only paid 2,000 tax on, and the last 40,000 you earned, you only paid 2,000. So the rate of tax is actually decreasing as you go along, which makes it regressive. But the high income earner is still paying more tax as a whole. They're just paying a lower percentage of their overall income. So this person's only paying 10% of their income, where the low income earner is paying 20%. So even if a tax rate is regressive, if the tax is on income, the high income earner still pays more tax, but they pay a lower percentage of their overall income in tax. So if we look at one more example, in this question here, based on the data above, which of the following statements is true? Country 3 and Country 5 both have regressive income tax systems. Look at Country 3, you pay 2,000 tax on the first 20,000 you earn, and then you only pay an extra 700 once you earn 40,000, and you only pay 3,200 if you earn 60,000. So the rate of tax is actually going down because you're paying $2,000 tax on your first 20,000, and only 700 on your next 20,000, and only 500 on your last 20,000. So that statement is true. This one here, Country 5, you're paying 2,000 on the first 20,000, then an extra 1,500 on your next 20,000, then 1,000 on your next 20,000. So that statement is true because they're both regressive. Sorry, this question is which statement is false. So Country A that statement is true. They both have regressive tax system. Country 2, two of the countries have progressive tax systems. Well, it's not Country 3 or 5 because they're both regressive. Country 1, you can see the rate of tax is the same the whole time. You pay 2,000 on the first 20,000, 2,000 on the next 20,000, and 2,000 on the next 20,000 for a total of 6,000. So that's a proportional tax system. This one here, the rate of tax is 2,000, then you pay 3,000 on your next 20,000 and 4,000 on your last 20,000. That's a progressive tax system because the rate of tax is increasing. And this one here, the rate's staying the same the whole time. It's 1,000 for each 20,000. So only one country has a progressive tax system. So that statement is the one that's false. If I go through the other ones, income tax country 5 is likely to have a higher Gini coefficient than country 4. Well, country 4 is proportional and country 5 is regressive. So that would have a higher Gini coefficient because regressive taxes lead to more inequity, which is what a higher Gini coefficient means. And country 2 has a system that promotes a more equitable distribution of income. Well, that's a progressive tax system, so that statement's true as well because it does lead to more equity. The last thing I want to discuss in this video is what's meant by a universal basic income and what are some of the pros and cons. So basically, a universal basic income is a model where basically all citizens get a given sum of money regardless of their living standards, their employment status, etc., etc. So it's a really basic thing, which basically just says everyone gets, say, $200 a week. Everyone gets $150 a week. Every citizen over 18 years of age, for example, might be eligible for this universal basic income. It does not matter if you've got a really good job, if you've got no job, if you get paid a lot, if you don't get paid much. Everyone gets paid the same amount. Everyone generates the same amount of, everyone gets the same amount of income from the government. So we're going to just talk about what this impact that can have on a range of different measures of performance, like employment, education, inflation, and equality. So starting with employment and unemployment, the idea of a universal basic income is you get it even if you have a job. So some of the strengths is, unlike our current welfare system, you don't suddenly lose your universal basic income if you get a job. So many citizens may choose to work harder knowing they're going to get to keep their income regardless, unlike welfare where you lose your welfare when you get a job. So there might be more of an incentive to look for work, which might create employment because people now know they're not going to lose their money from the government if they find a job. It can also lead to increased incomes because people have got more money, which again can lead to more jobs because people are spending more. That creates more demand for products. It might mean people enter the workforce knowing it won't impact their welfare. So again, more people want to work. And given citizens' welfare isn't cut when they work more people might look to work more hours as well. In terms of weaknesses, the government may be forced to raise taxes or cut spending to try and fund the universal basic income. It can also lead to too much debt for the government, which may mean that we might not be able to get loans from other countries because we might go into too much debt, and then that might impact our ability to spend on like infrastructure projects which create jobs and things like that. The other argument is that if people are getting an income regardless, they may choose not to look for work because they might just live on the universal basic income. So that would be another example, essentially, of why it might hurt employment because people might choose not to work. Education strengths. Unemployed citizens will not need to spend so much time applying for jobs, so they can focus on their education. So if you're unemployed, for example, under the current system, you have to be actively looking for work to get unemployment benefits, where under a universal basic income, people could stop looking for work for a while, get an education, still collect their benefits, and then they might be able to pursue a job in the future with their education. So there might be more incentive to get an education because you don't have to be constantly applying for jobs to get your welfare. The increased incomes of families might also allow parents to be able to provide a better education to their kids. Weaknesses, the safety net of basic income may deter people from getting an education, knowing that they're going to get money anyway. Total production, greater incentive to work because you don't lose your welfare if you work or your universal basic income. Increased demand, which will create more employment, which will then flow back to more production throughout the economy. But weaknesses is the government may need to raise taxes or cut spending, which could hurt demand in other areas. Inflation, weaknesses, the increase in demand may lead to higher prices, which can reduce our purchasing power. It can also hurt our international competitiveness if prices go up by too much. Equality, providing all citizens with a basic income should push people out of poverty, which means less people will be living in poverty and everyone can afford basic goods and services. More people are given more and more jobs becoming automated, allows more people to get meet their basic needs. But a weakness is if everyone's getting the sum of money, you could argue that it's more unequal because you're giving it to the rich, unlike our current welfare system, which is only targeted at low-income earners. So it could lead to a bigger Gini coefficient because everyone's getting support rather than just low-income earners. And lastly, the budget. You could argue the increase in spending from the UBI could lead to more GST for the government because people are spending more. Could also create more employment opportunities, which will lead to more income tax and companies making more money, so more company tax. But the weakness is that it's going to cost the government heaps and heaps of money. So there's estimates that if they gave everyone $250 a week, it would cost the government $360 billion. So that would cause the budget to go into a massive deficit, which would lead to bigger debt. And it's the main reason why the government really hasn't really seriously considered a universal basic income at this point in time. Thanks.